Welcome back guys to TradeProFX. Today is another amazing video and we are going to talk about the best secrets to strategies for derivative trading. So today, as you can see on my screen, we want to talk about the even odd contract types. So let me just break it down for you in an easier way. So first you need to understand if we are trading the even odd, what are we talking about? What are we talking about? So number one, you need to know that even odd are tick-based contracts. Number one, you need to know that they are tick-based contracts. That's why you can see we are trying to analyze the number of ticks of whatever wish that you want. So maximum is usually 5,000. So you are predicting if the last digit that market will give is an even or an odd digit. And when we talk whether it's the last digit is an even, we mean whether the last digit is digit 0, 2, 4, 6, and 8. It's very simple. So if we talk like this is volatility 10 and we want to trade even odd, that means we are looking at this last digit here. So if it is even or odd, so if it is odd, it's digit 1, 3, 5, 7, 7, and 9. And at least you can get a rough idea here by the recent pattern. So this point here, you can see this is digit 8, that is even. If it appears even here, the same thing is shown here. So you can see odd, it shifts to odd. If it is even, it shifts to even. So since there are normally 5 events and there is also 5 odd digits, the probability on in Deriv is usually 50-50. That's basically the truth of the matter. So that's why you can look at the probability here, the analysis. It shows you that the even digit is the number of times based on the number of ticks that we have placed, that is 120 ticks. It shows you that the even here it is at 47.5% and this one at 53.3%. So it shows you that it's purely probabilistic, that such that they do not differ, they do not leave each other at a far range. And we have a trading guide probability here. You can also observe about it. So, but today we want just to dig deeper when it comes to the two of them. So we have already said it's purely probabilistic. So winning consistently requires patterns and money management and timing. So those are the tricks in trading even odd. Number one, I've told you it's analyzing, or it requires you to understand the patterns. And number two, it's the money management, how you are putting your entry. Those are the stakes and the timing that you are going to enter based now on your strategy. So we have so many strategies given by people, and I usually tell someone, number one, you need to test, you need to first test using a demo account before you go to a real account. So if it is digit frequency observation, like the digit frequency observation is when we talk about the digits, like from digit 0 to 9. Now you observe the digit frequency. So you watch like the last digits for a few minutes, and the market normally you normally have some short term clustering. Like you can find there have been multiple even in a row. Like now this point, you can see it is even, and then probability of the odd appearing is going to be higher. So if you notice, like let's say 4 to 6 events in a row, the probability of an odd appearing next slightly increases. That is called the law of large numbers in action. So if we observe here, like here, it was even, then the odd appeared. So now it's the next thing is to know where is the timing. So you understand, we have already talked about that is it's like the frequency of observation. So you notice a row with maybe like 4 to 6 events, then the probability of an odd appearing is higher likely because there is something we call the rule of large numbers in action in derivative trading. So this, like this one, you can see this one is large numbers in action. This one is another patterns, and then we have odd digits appearing. So don't ever chase the market. Just wait for good streaks. Those are the patterns. You just wait for such kind of a streak of 4 to 6, then you can enter, stop your boat, enter, stop your boat. Are we together? So you can basically just look at it. If you see a streak of odd, same case, you can enter the market. So there was a time I talked about how to you can do the candle interval filtering. So maybe when we talk about the candlestick filtering, you can use the charts. So using the number of candlesticks, as I had shown you. So maybe let's just get into this point. So there is a time I was talking about the candlestick here. So if you click like this 1 minute and then you get to the candlestick, let me just clarify here about the candlestick interval filtering. So instead of trading every tick, you filter the candle intervals. Like now, we have 1 minute here, so you can observe each cross or each candle when it is crossing. You can see it is remaining with 18 seconds, 16 seconds. In that manner, you observe if a candle crosses on an even digit more often, maybe like for you can observe 3 to 4 candlesticks. So in which in the favor, maybe in the favor of whatever digit the candlestick is crossing, now it reduces some noise so such that you can now execute trades on the opposite now. So it's upon you. You can do the filtering, or you can just do that observation using 4, 5, 10 candlesticks. It is upon you. So you can just be waiting, and then you can basically see the cross of that candlestick. That is what we call the monitoring of the candlestick, the candlestick and the behavior of the production of even digits or over digits, but mostly let's say like the even digit. You look what candlestick crossed and the digit it produced. That is the concept when it comes to trading using candlestick. So number 3 is now what I was talking about, the risk, the money management. So whatever you are placing as the stake, like I have a stake of 196, but I'll be using a stake of 3 USD. So it's very easier to understand how to trade and to monitor my trades. So if I lose, I can double that stake. So let's say from if I lose like 3 USD after a loss, it doubles to 6 USD. So my capital can sustain that loss as much as any losses are found. So there are other things like the pattern exploitation. Maybe like let's say the digits often repeats, let's say here on this current price here. So you observe this last digit. That is what I've told you. So you can observe the repeat of digits. So like you see 999. So again, if you see that repetition, follow the same the same candles, the same way. Let's say it's 999. That is odd, odd, odd. So basically, the next 2 to 3 trades will be maybe even. So you can derive a strategy from that. So at least we have covered most of the time, and the time you stay on the market is also just a strategy. The time you stay into the market is also a strategy. We call it the time-based strategy, because if you spend more hours on the market, obviously you are going to lose. So just have some short streaks and get out. So we can see now here how we can see. So let's just now do practically. We can put like 20, the last 20 ticks. Let's say, let's see how the volatility 10 index has been behaving. So we can see even at 100 and odd at 11. I mean, even at 13 and odd at 11. So let's say if one side dominates by 60% or more, we can now trade on the opposite for a few number of ticks. So let's see if this even goes to 60%, we will click run on the opposite. So we will be going to trade odd digit. So let's wait and see. That is around 20 to 30 ticks. So we can just wait and see what happens. So or number 2, we can use we can observe mostly, but I see it is closer to 60, so it's getting to 56. So let's just wait and give it some time, just be patient. Then we will click our run trade so that we see we can equalize as the digits. I've told you also it matters at what time you are going to stay on that market. So let's just give it some time and see the behavior of the candlestick here. I mean the pattern here. You can see 58 very close to 60 run your boat. So very fast you can see I've entered the market and the first one is a win. Just look, I just want you to look. That is called now the best timing of the market.